Hey everyone, it's Alfred here. We are now back with a brand new episode that I'd like to call From Credit to Keys. I'm Alfred from Summit Beacon LLC, and we're geared to get you going on another path to good credit. And today we're going to tackle something that really confuses a lot of first-time home buyers. And what we're talking about is your credit report. It can be confusing, it can be time-consuming. Most people that I've run into over this past several years that we've been working on this don't really have a good understanding of how this works and what is really involved with your credit. And I'm here to show you and tell you what we can do to help you learn about the credit report, how to read it, how to understand it, how to make it benefit you, and let you know that your credit report is actually more than just a number. A lot of people reach out to me like, and want to know, hey, what's my credit score? How can I find my credit score? And although credit score is a good guidance, it is a good round overall description, but it's not the whole story. It really isn't the whole story. I mean, if you say that you have a 700 credit score, that is good. 750, that's good. The national average actually is 680. So if you're anywhere above that, that's good. However, your credit score is just one factor of the whole picture. It's more than just a number. It's actually the story that lenders read about on how you manage money. It's really your history. It's almost like a credit, I mean, like a like a report card. If you remember back in high school, it's it has all your grades from ninth grade to high school, and it's a report of all of your information, how well you've handled certain things, and you really can't avoid it. And so what's on your credit report is going to be the history of you on how well you have managed your finances over a period of years. And lenders are going to look at it whenever you're in the position and you're in the process of buying a home, looking to get your first home mortgage or maybe your second home mortgage, but specifically your first home mortgage. If you've never bought a house before and you go through the process of going through the loan approval with your agent, they're going to look at your credit report and you want to make sure that it's in spit spot condition. Buying a home is a big undertaking. It can be very stressful to many people. It can be very time consuming. There's a lot involved with buying a home, especially if it's your first time. I mean, anywhere from what state do you want to live in? Okay. And then what city, what county, what city do you want to live in? Once you figure that out, the neighborhood. It takes people a long time to go ahead and go through all this process. What neighborhood would you like to be in? A new neighborhood, an old neighborhood, a developed neighborhood, a brand new suburb. Is it gated? Gated community, not gated community. Does it have an HOA? Does it not have an HOA? The school districts that you want to be in, maybe the shopping that you're looking for that's nearby. Maybe sporting, maybe you want to be near sporting events. Maybe you want to be near the mall or whatnot. There's a lot of things that are involved in when you're buying a home. Maybe you want land. Maybe you want to be out of the city. What part? Do you want to be in the hills? Do you want to be in the desert, in the valleys, in the mountains? There's so much that is part of the home buying experience, and it takes a lot of time. And then you want to find a realtor. You want to find a realtor that is going to be comfortable with your personality, how that understands what you're looking for, and helps you guide you in the right way. And once you do that, all of these things take time. And then you got to worry about being able to qualify for a home mortgage. There's a lot involved. And when you get to the home mortgage, that's going to actually make or break this whole thing. It can be time consuming looking and gather all this stuff, and then to know that you're going to get disqualified from a home mortgage is heartbreaking. So you want to make sure that you are in a position to get that loan approval at a great interest so that you're not worried that's one less thing to worry about, right? Get your credit in a situation that when you go look for the city, the town, the property, the real estate agent, that it's all going to come together and it's not going to break because you're going to get disapproved of a loan. You want to make sure you're approved for a loan, and that's where we come in. This is what I want to help you and get you from credit to keys. That's the whole idea of this episode. This podcast. Last week I did episode 1. This is episode 2. I want to get you into a position that you are going to be confident. So by the end of this episode, you will learn how to read, understand each section, and spot errors that could be keeping you from buying your first home. So grab a notebook because we're diving right in. Topic number 1. What is actually a credit report. So basically, each of the three credit bureaus, there's three credit bureaus. There's Equifax, TransUnion, and Experian. Those are the three major credit bureaus, and they keep a record of your credit history. These are actually businesses, these are companies. They work with all of these different creditors throughout your lifetime. Every time that you apply for a loan, they get notified. Every time that you get approved for a loan, they get notified. Every time you get denied for a loan, they get notified. Every time you have credit, an auto loan, any type of student loan, they get notified and they keep a track. They keep a record and keep track of all of your transactions, even down to the monthly payment, whether you were on time, whether you were late, how all of this comes together and creates what is called your credit report. It's your credit profile. With that, a number is generated by this factor, this equation that is super important for you. And so I'm going to go ahead and walk you through that. Now, while each reports are similar, they are not actually identical. That's why it is super important to check all three. You need to check all three. Your bank, your credit card might give you information on one. Maybe they give you your score. A lot of banks nowadays, like a credit card company, you can look on their app and they'll probably give you a score, but they're not actually giving your whole profile. They might give you a roundabout number. You want to see all three because the lenders are going to look at all three. And this is going to be the deciding factor on your loan. All right, so let's go ahead and just take a look at some of these items that's going to be on your credit report. So I put this together. Basically, what is a credit report? Like I mentioned just now, each of the credit bureaus are going to be Equifax, Experian, and TransUnion. They keep a record of your credit history, like I just mentioned. While reports are similar, they're not identical. That's why it's important to check all three all the time. So lenders might pull one, two, but we need to make sure you pull all three. That's very common. You might see one or two, but let's go ahead and find out. Let's go ahead and talk about what actually is on your credit report. These are five key sections. Everybody's credit report is broken up just like this. So these are the five key sections that you will see on your credit report. So you're going to see personal information, right? You're going to see your name, your address, your social security number sometimes, and your employment history. These are all on your report. You need to make sure that everything is accurate, right? If your name is inaccurate, you need to dispute it and correct it. Many times names are spelled incorrectly. They're backwards, they're in reverse section. May have your middle name, may not have your middle name, may have your maiden name, but not your married name, may have both married names if you've been previously married a few times, may not have your married name. It just so the variations are amazing. So you need to make sure that your name is spelled correct. If you never check your credit report, who's gonna make sure that this is correct? Nobody is. So you need to be the one that you have to download it, take a look at it, and see what's on it. If you need help, that's what we're here for. You also need to make sure that you know that your address is correct. Many times they might have your current address, but they have all of these other addresses that you may or may not have ever lived before. It happened to me. There was addresses on my credit report that I never lived at. So sometimes there's this cross communication, contamination with somebody else in their credit report, and you want to make sure that they have the right address, all three bureaus. And you want to get rid of anything that's inaccurate. Also, your social security number, sometimes it shows up. You need to make sure that that's correct. And then your employment history, you want to make sure that they actually have the employment places that you used to work at and then that you're currently working at. And you want to make sure all this is accurate. So that's your personal information. Now, once you start scrolling down your credit report, there's going to be accounts and trade lines such as credit cards, loans, and mortgages. You want to make sure that these are accurate. Are the credit card accounts on your credit report actually yours? Were they yours? Do they belong to you? Do they not belong to you? This shows your payment history. It shows your balances and your credit limits. All of this information is on there. You want to make sure that this is something that is, if it's incorrect, then you need to work on disputing it. Credit inquiries, which are going to be hard inquiries and soft inquiries. Too many hard pulls can temporarily lower your score. Now, what is an inquiry? An inquiry is when you apply for credit, whether it be a department store, a credit card, an auto loan, a home loan, any type of loan that is an institution is willing to give you money, whether you get denied or approved, it will show up as a hard inquiry, sometimes a soft inquiry. Hard inquiries lower your credit score temporarily, and too many will damage your report, and it's not good to have too many. So you need to see what's on there. Fourth item right here is what is going to be either called collections or public records, right? These are going to be late accounts, bankruptcies, tax liens. You need to check everything. If you have these on there, you need to make sure that they're actually correct. You need to make sure that they apply to you. And then number five is your credit score and your summary. So your credit score and your summary will, it's a whole factor that all of these items create this formula that gives you the credit score. So this shows your score and your risk factor. So that's why people's scores are all different. Everybody has different information on their credit report, and no credit report is the same. So depending on how well you manage money, how well you manage your accounts, how well you've paid off your loans and whatnot, this is going to be showing up on your credit report. So you need to know that. So let's go. What are the flags to look for? You want to pay attention to accounts that are not yours, right? If they're not yours, this happens all the time. They may not be yours and they're on your report. So you need to pay attention to that. You need to pay attention to incorrect balances or statuses, and you need to pay attention to duplicate collections. This happens many times. Collections get reported and then they get reported again. Accounts that should be closed but show up as open, right? It's okay to have closed accounts, but if they're closed and they're still showing up as open, that's an error. They need to be worked on and disputed. Even small errors can cost you thousands when it comes to your interest rates. You need to know, this. You need to know what's on your report so that you can correct, adjust, repair, or have them deleted. That's what exactly why you need to look at your credit report. So let me show you how lenders use your credit and how they calculate your credit score. So lenders use your credit report to evaluate your risk, and here's the breakdown. I'm going to show you another. Let me just pause right here for a second. I'm going to show you what we got going here. So I'm going to bring over a little graph that I have here, and it'll help you get a little bit of a better understanding. So let's go ahead and go back over here. And this is what I want to show you an example. So the credit bureaus have this formula, all three: Experian, Equifax, and TransUnion. And their companies, like I said, their goal is their business is collecting and maintaining your credit information. That's what they do, right? That's their business, and they create a score for pretty much everybody. So this is how it's factored into. Your payment history is the number one factor in your credit report. It's 35% of your score, okay? So when you make a payment on time, that's a good thing, obviously. When you miss a payment, whether it's 30, 60, 90, or even more late, that is not a good thing. And you need to know that your late payments are the number one factor that gives you your credit score. So you need to know that, because if you in the past have a history of late payments, it's going to show up and the lenders are going to see that. And that's the number one thing. The number two factor is the amount owed. How much do you owe based on your credit limit? So if it's okay if you owe money, but how much do you know based on what the limit is? For example, a credit card. If you were given or you were approved for $1,000 credit card, that's wonderful. If you use $800 of it, and at the end of the month, it's reported to the bureaus, because each credit card company is going to report your activity for that month to the bureaus. And if they report a $800 balance, although you're under the limit, that means you are using 80% of the limit, which means that is going to bring your score down, because that's the number two factor. The best result is to only have reported 20% or less. Now, you can use the whole limit, but at the end of the month, when they report to the bureaus what your balance is, you want to pay down that balance to bring it down to 20%. For simple math, 20% of $1,000 is $200. So if you use 80% of the credit, but before it reports, you pay that down to at least $200, the credit card company is going to report to the bureaus that you are only using 20%, which is going to be good. You want a low reported balance, not a high reported balance, and they report every single month. Every creditor may report at different times of the month, so you need to know when your credit card company reports to the bureaus. The day they report may be different than the day your payment is due. For example, if your payment is due on the 25th, they may report to the bureaus whatever your balance is on the 20th. So you need to look at your statement and you need to find out what exactly is the reporting date. It may be different than your due date. Not all the times, but usually it is. Now, 15% is your credit history. So if the creditors report a longevity of credit usage in good manner, that's good. So if you have a couple of credit cards, maybe an auto loan that you've had for quite some time, and you are establishing good credit, then that's good. If it's bad where you're late or you're in default or it goes into collection, that's your history as well. So that's 15%. So that's the number, the third number, the third biggest factor in your credit. The number 10, the number four is 10%, which is the type of credit. So did you know that there actually is different types of credit? So one of the most common types of credit is what is called a revolving credit, which is for example, the easiest way to explain this is going to be like a credit, right? Your credit card payment can vary month to month based on how often you use the card. If you use the card a lot, then your payment could be two, three, $400 a month. If you use it less and you don't use it all, it could be a low payment. So it's revolving throughout the months based on your activity. Does that make sense? That's the type of credit. So that's going to be your revolving accounts. Now, your installment account is another type of credit. And the best and easiest way to describe this would be like a auto loan. If you go to a car dealership and you get a loan to buy your automobile, it's a fixed rate at a certain percentage. For example, you know for sure every month that your auto loan payment, I'm just throwing out a number, is $500 a month. That's a fixed payment. It's always $500 a month because it's an installment loan. It's a fixed rate. Whereas the credit card can be revolving because it varies on your credit card usage. Does that make sense? Even like a home mortgage is a fixed rate. That's another type of installment loan. It's always $2,000 a month. I'm just throwing numbers out there to help you understand that that's a different type of credit. So, and then you have like a charge card, which is all the balance is full every month. That's another type of credit. So it is actually good to be well-rounded in this category right here. It is good to have credit of revolving and then credit of installment and whatnot. It's good to have different types because it builds strong credit report that you can manage money in different situations, and that's what they like to see. The fifth category is when you apply for credit. Now, so we have to apply for credit at times, right? You have to apply for a loan or for a car or whatnot. However, you need to be wise when you do. You can't go to, or at least you shouldn't go to a department store and apply for their department card, and then you go down the street to another department store and you apply for their card, and you go to a tire shop and you apply for theirs, and you go to a gas station and you apply for theirs. You have all these applications on in a short amount of time. It's going to flag the mortgage company, and you're not going to look wise in their eyes because you've applied for too many items at too many times. Now, they don't flag you if you in the springtime you maybe apply for one or two cards, and then in the summer maybe one, and then in the fall you might do one or two. You've spread that out. It's not a big deal. But when you have too many in one short time period, they don't like that. And it's going to be a detriment in your favor when you try to apply. So that's why you want to get prepared for your home mortgage many times in advance, months in advance. So let's go ahead and that's your credit. That's a kind of the graph that I'm just was showing you. You want to make sure that see every detail matters. So you need to know these things. And so I hope this is helping you. I'm going to go ahead and let's get back to my screen so we can just see what are the action steps. What can you do with this information that I'm sharing with you? I hope it helps you. So here's what I want you to do this week. I want you to go ahead and pull all three credit reports. I'm going to give you a link in the description below where you can pull all three credit reports, and you can get all three, TransUnion, Experian, and Equifax. You don't want one or two, you want to see all three. And then I want you to review each section carefully, and I want you to mark everything that looks wrong or outdated. Go through it. Nobody knows your credit report like you do. Nobody knows what department stores you've applied for. Nobody knows what auto loans you've applied for except for you. Go through it, and if there's any suspicious activity or wrong information, you need to just highlight it and mark. And then you should dispute for any errors you find, even small corrections. Now, if you don't know how to dispute this or you need help, then you can reach out to us. I can give you the tools where you can dispute this yourself, or I can give you the tools or the resources that we can do it for you. We do full service, and we do also I have a program where you can do this yourself. So just reach out to me in the notes below. I'm going to give you the resources where you can A, do it yourself, or B, you can contact us and we can help you and get this done for yourself. So just kind of a quick tip, track your disputes and updates in a notebook or a spreadsheet so that you can see progress when this works, when time goes on, so that you can see what you're doing and how you're doing it. Like I said, if you need help with any of these items, we're here for you. We can help you get through this. A lot of times, many people think you're alone in this, but you should know this ahead of time. And when you're looking for a home, most likely they're just going to, if you're trying to get a house, they're going to pull your credit report and they're going to see if you're worthy to get the home loan or not. And if you're not prepared by then, what they're going to do is run the numbers and it's going to create, let's say you found a house, you got the realtor, you have the home that you like, you're ready to see if you can afford this house and you want to purchase it. Your realtor is going to help you find a loan agent so that you can get a loan. The loan agent is going to take some basic information from you, such as your name, address, social security, maybe where you work, and your income. They're going to pull your credit and it's going to be a hard hit. Then they're going to see if you're worthy for a loan. If you're not, they just wasted your time and then you got a hard hit. And then now you're in a situation where you didn't get approved for the loan. So how can you avoid that? Don't waste your time. Spend time working on this now. Then you can get the pre-approval, then you can get your real estate agent, and then you can go looking for a home knowing that you are qualified for the type of home that you're looking for. So let me give you an example of a real life example pertaining to all this that we're actually talking about. So I had a client named James. His report showed a medical collection that he had that he had actually paid off years ago, but because it was marked incorrectly, his score was lower than it should be. So we disputed it, we got it corrected, and his score jumped 45 points in 1 month. Now, that's pretty common. I mean, it's not common, but it happens because we go through this process. It's a lot of work, it takes time, but we get it done. But it boosted him up 45 points, enough for him to qualify for a low interest mortgage loan, and that's what you want. So that's why reviewing your credit report carefully is so crucial because it's your financial story and you get to make sure it's accurate. You are the one that's in control here. You look at it, you review it, make the corrections, make the adjustments, and then apply. If you need help, like I said, we're here for you. So that's it for episode 2, from credit to keys. If you've learned something new today, hit the subscribe, leave a comment, share this video with someone who's working on their credit. Remember, your credit report is a roadmap to your first home. Read it, understand it, and take action. For personalized help reviewing your credit report or creating a plan for improving your score, just check out the links below. I'm going to post them down below and we can help you out. If you don't know where to go, don't know what to do, keep an eye on this channel. You can also follow me on Instagram. I have over 1,000 videos on Instagram, 500 plus here on YouTube. And that's what we're about. We want to help you succeed in life. We want to help you get your first home. And we hope that this helps you in many ways. And next week, we're going to cover the fastest way to build positive credit history, right? So now we're talking about credit. I just showed you how your credit report may look. Last week was the basics. This one is going over your credit report. Now we're going to go on the fastest way to build positive credit history, and you're not going to want to miss it. So please like, subscribe, please support us. We're growing much faster on all the other social medias, but I want this one to grow. This is where I'm going to post the longevity, the longer forms of videos. As you know, YouTube is great for that. And yeah, let's do it. Let's do it. Just remember to keep a look on your report, keep an eye on it, and we'll get you going. We'll help you out. Keep an eye on this channel. Put this channel as one of your favorites, and it's going to be helpful for you in the future. So God bless. Take care. Stay strong. Stay faithful, and never give up.